Hello, my name is Derika Isakova and you are watching InstaForex News. Today we will talk about the Australian currency movements. The Australian dollar will be possibly going through harder times. Concerns regarding that China is trying to slow down the rate of its economic development, price decline for primary goods and new investors' unwillingness to risk, all this will put up pressure on the Australian currency. The economic growth of China is one of the topmost factors for Australia, but not only because of the direct export to this country, but also due to impact of the Chinese demand influence on the raw commodities price. The Australian dollar can find some support in the short term as the investors are waiting for one more interest rate tick-up of the Australian Reserve Bank. The meeting will be held next week. However, the bank is likely to advance the rate by 25 basis points, not by 50 points as it was expected by some analysts, and it will be the last rate raising for some time. The data released this week show that the annual core inflation in Australia came higher than estimated and reached 3.4% in the fourth quarter, while there was focus to 3.25% level, and the probability of another rate advancement strengthened. But as it was already mentioned by the Australian Treasury head Wayne Swan, the inflation rate, which is now significantly higher than the target range of 2 to 3% of the RBA, seems to lose the pace. Events out of the Australian bonds also did not come in favor of the country's national currency, preventing from a serious breakthrough towards the parity rate with the US dollar, which seemed possible in the beginning of the year. Quite the opposite, the Australian dollar was moving downwards steadily during the last few weeks, and now it is going to fall below 0.90 against the US dollar. It was Forex News provided to you by InstaForex News team and me, Derika Isakova. Thank you for watching us and goodbye.